Good afternoon, everyone, and thank you for joining us today. My name is Jacqueline Donado. I am the Program Manager of the Queen's Chamber of Commerce, and I am very proud to present today's webinar on Home Buying Made Simple, sponsored by the Queen's Chamber of Commerce and the TD Bank Charitable Foundation. Our speaker today is Mrs. Dahiana Genao, TD Bank Community Mortgage Loan Officer in New York City. Mrs. Genao will show us important steps in how to prepare and becoming a first-time home buyer. Mrs. Genao began working at TD Bank in 2010, and now she is a community mortgage loan officer. Her primary focus is to educate low-income borrowers on topics such as established credit, down payment assistance programs, and how to become a first-time home buyer. I wanted to acknowledge the participation of a special guest today, Felix Hernandez. He's a real estate consultant from RXP Team Real Broker in New York, Connecticut, North Carolina, and Aneuri Evangelista, real estate consultant also from RXP Team at Real Broker. This webinar will be held on Zoom and broadcast live on Facebook Live. At this moment, I want to turn on to Diana and welcome Diana to participate and to be here with us today.
Hi, thank you, Jackie. Uh, Basically, my name is Diana. Like Jackie mentioned before, I have been with TD Bank for a while. I focus the most on communities to just get knowledge on how to purchase a house. People think that it's hard for you to get to buy a house, and it's actually is not. If you plan it, if you make a decision to do it, it will be easy. But if you start from scratch, it will be a little bit hard, but it's not as hard as people think it is. Can you go to the next slide? So there's a lot of good things for you when you buy a house. The first thing is that you become an owner. So instead of you renting and making somebody else richer, you're actually investing in your future. So you're actually going to have something that you will look forward, that you're going to have equity in the future. So that's one of the main things. And one of the things that the bad thing is that when you have a house is that sometimes when something breaks, it'll be on you. So it's like getting the right information for you to buy a house is always a good thing. You also get a tax deduction when you purchase a house. So you have a lot of advantage, but it's good for you to find out first if you really want to buy a house or not. Because like I mentioned, sometimes it can be expensive, but most of the time it's a good thing and it will be equity for you and your family as well. To obtaining a mortgage, a lot of people think that, hey, I need $30,000 to get a mortgage. I need $60,000 to get a mortgage. And sometimes you don't need that much. You need less cash than that. For example, 2% of the loan amount, for example, 200,000, you will need $4,000, 4,500. People would think, hey, I might need $10,000 to buy a house for 200,000 or a little bit more, but it's not. It actually is less. A lot of banks, they offer a first-time home buyer product that it will let the customer not to get so much, not to put so much money down for down payment. Can you go to the next one? How much can you afford? That's a question that a lot of customers should ask themselves, like, do I ready to buy a house? They always feel that they might not be ready to buy a house. But when you actually go to speak to somebody from the bank, they let you know, hey, how much you qualify based on your income? Because it's basically is what are you looking to buy? If you want to buy a $1 million house and you're only making $30,000, you might not be able to qualify. So it's basically is that never put yourself that, oh, I cannot afford it because I make $20,000. I cannot afford it because I make $30,000. You don't know that. So first, it's a big thing. It'll be a good thing for you to go to a bank and let the bank let you know how much you qualify based on your income. Your debt to income ratio is basically it's like they take a percentage of your loan amount and they will let you know how much you qualify. What we look for in the bank is that how much you make in a month and how much expense do you have monthly. So if you're planning to buy a house, it will be good for you to try to reduce all your credit card bills. The less that you have, the better for you. That'll be something good that we look into it. Because if you see that all your credit cards, they will be maxed out. That means that you're living on a credit card because there's no need for you to get a mortgage if right now you have all your credit card maxed out. You don't have too much limit to use your credit. So you have to focus as well on that. That's something that we as a bank, we focus on, that we look at the credit. How much do you have on equity in your credit card? Um, as well, we always look in some different type of product that allow the customer not to put too much down. They think that the VA loan, which is for veteran, they can use 100% of loan to value. They don't have to put no down payment, and they don't have to have no credit score, good credit score. Can you go to the next one? How do you apply? Uh, for us, is good for a customer to get seminar, to get as much knowledge as possible, to get involved in what are you getting into it. Like I always tell the customer, this is something that is going to be yours, not mine. I feel that a mortgage like a marriage, that you're going to be married for 30 years and this is on you. It's up to you to find out more, as much information as possible. If you go to a bank, you ask them, what do you need to have? What kind of document do I need to have? When do I start the process? What information do I need? Or what do I need to know? What's the credit score? Because a lot of people think that, oh, hey, just go get a house and that's it. You're going to get with a realtor and most information. But it's more than that. You're getting more than that. A lot of people, without having the proper knowledge, they will get into a loan that they end up paying forever the rest of their life. So it's up to you, different type of thing. It says the audio is bad. They cannot hear me at all. Can you guys hear me?
Yes, we can hear you.
Yeah, we can
Um,
hear you.
Mr. Cato said that the audio is bad.
He has to check his browser.
A lot of people think that when you go to a bank, when they come to the first thing to the bank and say, "Hey, Diana, I'm looking for the interest rate. What can you offer me?" What I tell the customer at the beginning of the process, you're not looking for a bank. What you actually is, you're looking for one bank that say yes, you qualify. But a lot of people think that, hey, just because I'm going to this bank, I'm going to go to a different bank to see what they have for me. So for me, I think it takes one bank for you to be approved. And if you go to different houses, you don't need 5 letters from different banks saying that you're approved. You don't need to be approved for 5 different lenders. You only need to be approved for one lender. The difference with them is that we do have different products. We do have different uh, programs for first-time home buyer. That'll be the difference. But at the same time, if one bank say no, try to go to the next one or try to get what is stopping you for not to get approved. Because a lot of people say, no, you don't qualify based on your income's too low. But if your income's too low, you can get a cosigner. A cosigner will help you to get a little bit more. And as well with the different lenders. Different lenders, we do sometimes provide different interest rate. Sometimes might not be the same, but we do offer different things on the closing costs might be different. Uh, it will be also as well, the interest rate might be different, but it's up to you. Whoever you feel more comfortable, but it's not a bad idea for you to go to different bank and trying to find the same information. If you go to TD Bank and I tell you, you need this amount to put down payment, this is the product that we have. Mm, This is the product that we have. You can go to different bank to see if they're telling you the truth. Just to confirm that the information that they tell you is the correct one. A pre-qualification versus pre-approval. When we do a pre-qualification, it's basically I run all your numbers based on everything that you present to me. They say, I ask you, can you show me your credit score or the last time you pull up your credit? That way I don't have to pull it. Can you show me your debt to income, for example, your credit cards, how many bills you owe, exactly how much your monthly payment, what is your car loan? Or pre-approval, we're gonna run actually your credit. We're gonna run your credit and we're gonna give you something more specific. Say, yes, you definitely qualify for that amount. So that's the different one. The pre-qualification, we don't pull up your credit, and for the pre-approval, we do. For some people, pre-qualification, they're comfortable with it, but for some realtors, they feel that they need to be approved. A lot of customers, they feel that they know their credit, and when we run it, most likely be bad. It's not as good as they think that it was. I say, oh, but last time I checked, it was 700, but now it's 500. So it's basically, it's good for you to be on top of your credit as well. Don't let the bank let you know what's your credit. Let the bank know what is your credit. That's the difference too as well. It's good for you to know your numbers before you go to the bank. Be prepared because a lot of customers they go and they just go empty hand. When you go to the bank, try to take 2 years of tax return, 2 years of pay. No, 2 years of W-2, 1 month of pay stuff. So basically, you're letting the lender know, hey, I'm ready. I want to buy a house. What do I need to know, and what step do I need to take me to that place? So it's basically we work with customer together. So if the customer come ready, it will be smooth of the process because we already have most of the information that the customer needs. And at the same time, when we see that the customer come ready, we make sure that hey, the customer is really serious what they're looking to buy. They're really serious into the process. Can you go to the next slide, please? How do you apply? Like I mentioned before, it's good to take documentation when you go to a bank. It's good to take 30 years, 1 month of pay stuff, 2 or 3 years of tax return. I always ask for 2 years of tax return. And in the process that when you purchase a house and you're trying to get pre-qualified, even pre-qualified, let the lender know any change that you have had in the past 30 days. They say right now, during COVID-19, you lost your job. Right now, you lost a down payment. Or communication is a key for you to have a successful transaction or to purchase a home because some people wait until we had to run the credit at the beginning of the process and we run the credit at the end. We do a hard pull at the beginning and we do a soft pull at the end. So basically, why are you going to wait for us to get this information for you to let us know? Instead of you letting us know, hey, I lost my job. Right now I'm receiving unemployment. Having unemployment is not bad, but at the same time, we don't see it as a stable income because you can lose that any minute. If you have any change, that it can affect the application. Let's say you have a co-borrower and the co-borrower say, hey, I don't want to be a co-borrower no more. You had to let the bank know. A lot of people feel that sometimes some information is not important to the bank, but it is important for us. Anything that you do in the process, any question that we ask you in the application, that something have changed during that process, it's good for you to let us know before we find out because then we're going to start asking more questions. How come you let us know? How come this is this? So it's good for you to let us know in ahead of time, just in case something happened, for you either to deny the application or continue with the application. Can you go to this next slide? Thank you. So basically, when you go to the bank, I can let you know, hey, right now you qualify for 500,000, but it's up to you if you really want to get a house that you can afford. A lot of customers come to me, Diana, look, I know that I qualify maybe for more, but can I get a 200,000? I want to have a house that at least I can make a barbecue. A lot of people, they try to reach that. If the bank let them know 500,000, they go to the max. But at the same time, do you really think that you need a house for that much? Do you really think that you'll be able to make those payments on time? Because you have to think about it. Now you are your own. Now if something break down, you're the one who had to pay for it. So you have to think about all the stuff. If you want to buy something new or the plumber or something happened, it's going to come in out of your pocket. So now you had to rethink yourself and say, hey, I know I qualify for more, but I had to save money because now I own a house. A lot of people think that because you buy a house out 300,000, but you qualify for 500,000, can I use the rest of the cash to invest it in the property? That doesn't work that way. Not with a type of loan, a first time home buyer. You have to get a construction loan from that. But the bank will only lend you the amount of the purchase price. So if the house costs 300,000, you have to put a 3.5 of down payment. So that's how much the bank is gonna lend you. They're not gonna lend you nothing more besides that. Um, Fix your credit. So if you know, like I mentioned before, you're trying to buy a house and you know you're gonna be in the process of that, it's good for you to start planning for your credit score. What do you need to pay? If it's something need to be paid off, if it's something that you need to be that is stopping you for increasing your credit score, what do you need to pay so you can get to that? Try to save as much money as possible during this process. Sometimes you definitely don't need to use all the cash that the bank is asking you, but sometimes they request for you to have reserve because you never know what can happen in the process. So it's always good for you to always have cash. And if you're going to use any type of cash during this transaction, try to have it in the bank. A lot of people have it into a safe box in the house or someplace else. We ask the customer to have the money in the bank account. That way, the bank will not be able to. They will be able to trace that funds. If you're receiving any gift, it's good to receive it in the check, not cash at all. So it's good to prepare yourself for the loan and ask a question to the loan officer and be honest with them, because a lot of people feel that I might not be, I might not tell this to the lender because I might get denied because of that. There's always a way to work things out. You're not going to get denied for the first time if you don't try it. But communicating is the key for you to have a successful application, because lately I'll be having a lot of customers that they are forgetting to mention a couple of things. So it's good to be prepared and for you to let them know what is going on your present situation. Can you go to the next slide? The mortgage payment. So the mortgage payment consists of different brackets. The principal, that's the amount of the loan, and the interest rate, that's the fee that the bank is going to charge you. The tax is going to be based on the amount of the property. So if the property have any taxes, you have to pay the percentage of that. And then insurance as well, you have to buy a home insurance. A lot of people feel, hey, do I need to get a home insurance? So it's like a car. If you have a full, if you purchase a car right now and you haven't paid it, you definitely need to have a home insurance for that. Because if something happened to you and they need a fire or something like that, you still owe the house, and the house needs to have a home insurance just in case something happened. The insurance can kick in and pay that for you. Different payment also besides that buying a house is that if you have a condo, the condo is going to request a fee by itself automatically. That will be a condo association. So you're going to pay the principal, the interest, and you're also going to pay the condo fee. Sometimes with the condo fee, there might be as well taxes and insurance will be combined in there. But majority of the time, the insurance will be separate. The taxes they might have to pay with the condo fee. If you put less than 20% down when you're buying a house or when you're buying any property, what the bank would do, they would charge you a 20%. That would be like a private mortgage insurance. But we do have some products that doesn't allow the customer to be charged for that. So it's different ways. So if you hear some people telling you you need to put 20% down, not all the time, because if you have a house already but you want to buy another house, then that'll be applicable for you because you need to put 20% down. But this is the first time you buy a house, you can put as low as 3.5, and people feel that, hey, that's not that much compared to 20%, and 3.5 is not that much. So it's always good to get the answer from the people that know specifically what are they talking about, because you don't want to get the wrong information and feel that you need 20% of the purchase price just for you to get a house. The different products that the bank offer that you don't have to put 20% down. Well, can you go to the next slide? Now I'm going to pass it to Felix, and he will go over to this slide to explain about your team, because you definitely need a team when you're buying a house.
Hi everyone, my name is Felix Hernandez. As Diana said, I am one of the team leads at the RXP team at Real Broker. We are a real estate agents or team of agents that help out in the tri-state area, so New York, New Jersey, Connecticut. With me is also Anelri Evangelista, who's part of the team, and he leads kind of the team of agents in the New Jersey side. So he'll be helping us out here as well. But the team is more than just that, right? So when you talk about your home buying team, it's your mortgage broker or lender in this case, when hopefully that'll be Diana, right? Your agent, which will be us in this case, your closing agent, home inspector, appraisers, and finally insurance. So I don't want to go too much into these, but basically the work usually starts at the bank. Once you get that pre-approval, you know, a lot of people take too much time in that step, but it's always good to just start going out there and see what's available in the price range that the bank is telling you. So that way you can go out, start narrowing down what the things that you're looking for are to see if it's attainable at that price range, or if you need to go back to the bank and maybe adjust the numbers accordingly So it's usually good to go out there. So we'll be kind of your first line of defense there, to showing you the houses in the areas that you're looking for, and kind of guiding you through the process as we go. Connecting you with the closing agents if needed, with home inspectors if needed. The appraiser will come straight from the bank, and the insurance agents. Usually, people just use whoever they're using for their car insurance. But we also have a couple of agents that we work with if you need any quotes for once you're ready to purchase the home. If you go on to the next slide, and maybe Aneta can help us out with the next slide.
Yeah, so this slide is, and hello everybody, I'm Evangelista, like Felix said, it's part of the RXP team, mostly covering New Jersey. In this slide, we'll just talk a little more about the agent side of things, and really the purpose for getting an agent, right? We're all familiar with sites like Zillow, Trulia, Realtor.com, right? We're all familiar with going online and seeing, pretty pictures of houses and walking to open houses. And because of how easy technology has made the home viewing process, most people tend to forget or tend to neglect working with an agent. So we did want to point out a few things that are in your benefit. I think the first thing being that as a home buyer, it costs you absolutely $0 to hire an agent. As a buyer, agents work for you at no cost. And to add to that, they have a lot better access often to inside information as it relates to properties. They have access to be able to talk to sellers. They have access to just their experience and history with dealing with dozens of transactions on an annual basis that they can leverage in your benefit when negotiating for the purchase of new house. Dealing with contracts, finding referrals. In short, when you are ready to buy a house, having that right representation as a buyer, having that agents to work with you alongside of you will make a huge difference in terms of making sure that you leverage the best deals, leverage the best terms and outcomes that you can hope for when not only viewing houses, but making offers on houses and hopefully, contracting and closing on the house. Anything you want to add, Felix?
No, I think you bring a great point there in terms of negotiating, especially nowadays with everything going, almost every house going into what's called best and final when they're kind of going in bidding wars, especially in the New Jersey and Upper Westchester areas where everyone trying to move away from the city is relocating. So there's been a lot of bidding wars, and that's when having an agent that knows what numbers to target in terms of an offer and can build that relationship with the other agent, that could make a huge difference in terms of actually winning the offer.
I have a
And just
sorry. So with the turn of the negotiation, I heard rumors that some sellers, what they're doing is that because the interest rate are so low, they actually increasing the selling price. Is that something that's true?
It could be, and I've seen it. It does happen. Doesn't mean that they're all appraised for that of value, though. Appraisals are getting harder and harder these days, and that's kind of the last step where the bank comes in and they send someone out to look at the comps in the area and see what other houses are selling for, and if it's outside of the range that you're buying, the bank may deny your loan because of that, or you have to go back and renegotiate the price because it was deemed to be too high. So it's a risky move to do it, but it does happen.
and one thing to sort of piggyback, related topic to that, when dealing with sellers, they are of course looking out for their own interests in selling their homes, right? When dealing with your own agents, that agent has a fiduciary duty to you to represent your best interests. And when it comes to questions like this, in terms of what are sellers doing, or you know, what have you seen out there, or you know, what's are the ins and outs of, you know, say this one particular property that you may be interested in. If you were to ask the seller directly some questions, you know, you may or may not get straight answers. You may or may not get correct information, because again, they are looking out for their own interest in making that sale. When you ask your agents, their duty is to find out the answers for you, to get you the right information, and you know, help guide you so that you can make the best decision possible.
If there's a limit of houses that you can show to any customer, they say if I want to see 5 houses, what do you want? I haven't found the right house. Will you be able to continue assisting me or anything? Or if I see a house in CeeLo, can you show me a house that I see in there?
It depends if we like you or not. I'm just kidding. No, there's usually no limit. Obviously, if it gets to a point that we're seeing too many houses, then we may reevaluate the relationship. One, to see, are we looking at the right types of houses? Are we looking at the right price ranges or the right locations? Because is there a reason why we're going out so much? So it'll be more of a conversation, not necessarily a limit, to see if they can better work with somebody else, or they can reevaluate what they're looking for in order to kind of adjust to what it's available, rather than, you know, they just going out there to look at houses with, you know, with kind of not being mindful of everyone's time. So it's really a conversation, but there is no limit. And yes, we can show things off of Zillow, as long as it's an actual listing. So Zillow tends to bring in what called pre-foreclosures and coming soon houses, which are not real listings. They're just estimating that the house may come up for sale. So if it's not a real listing, there's no way for us to really go out and get you a showing, right? Because if it's not listed on the multiple listing service, or there's not older agent, or even a for sale by owner, then there's not a lot we can do to show you a house that's not really for sale.
I had a question.
Yeah.
During the COVID-19 times, how is the process changed during the open houses or just showing individual properties?
So in the beginning, there we were pretty much shut down like everyone else. So it wasn't until phase two that we could really go out there and do anything. So in the first few months, and even during phase one, we can only do what's called virtual showing, where either the owner or the listing agent can one, do a video call like this and actually, you know, show you a video of the house, or if, an actual videographer will go in there and record a walkthrough of the house, or something similar to that. There were no in-person showings and there were no open houses at the time. And then once phase two started, then limited showings came back in, where we can actually go with only one and sometimes two buyers per showing, or at a time inside of a house, and the seller couldn't be in there. So you know, it's been challenging, but with the right protective gear and the right social distancing in place, and things like that, you know, we're now slowly starting to get back out there, and showings and open houses started becoming more common again.
As a realtors, what do you guys see the market right now, to buy or to sell? Like, what do you guys think that we should wait a little bit longer, or we should just buy now?
So I don't know if you want to take this one, Nadia, because I'll give my 2 cents really quick.
Mhm.
If it's for your family, your time is whenever you're ready to buy, right? If it's because you got to go into school and you want to be in a different school district, the best time to buy is whenever you need to buy. If you're an investor, it might be a little differently. Obviously, when you're investing, you have to kind of buy at the right time and things like that. But if it's for you and your family, it's always a good time to buy, especially with the low rates that we have going on now. You might pay a little bit higher than you would have a few months ago, but the rates, the low interest rates, are offsetting that, and you're still getting something that you can build your future off of, and build equity along the way.
Yeah,
Um,
just to add to that, um, some may say that it's not the right time, or that you may, to Chris's point, may end up paying a bit more now versus a few months ago, just because of how low interest rates are and people trying to move out of the cities and many other reasons. But when buying a home, don't think of it as a one-time impact, or a one-time purchase. This is a long-term investment. Even if you end up paying a bit more than you perhaps would normally pay, just because of the situations now, over the course of, say, 5, 10, 30 years in which you'll be in this home, that would be a insignificant number. Over time, you will have paid down your loan and your mortgage. Over time, your house equity will keep on increasing, your house value will keep on increasing. And at the end of the day, what matters is whether or not you are ready, you and your family are ready. And what matters is if it makes sense for you and your family to buy at any given time. The process itself may take longer, or it may be shorter, depending on when you do it. But whether or not you're ready is solely up to you.
I have a few questions on the chat, and remember that we are doing the Facebook Live, and it's also people asking questions on Facebook Live. Do you want me to do it now, or do you want to go to the presentation?
No, it's fine. We're okay
Okay.
answering as they
Okay.
come.
Yes. One question is, would you rather advise the buyer to do a drive by first to see the property and to see if they really like it?
So yes and no. Some buyers do like to go out and see the neighborhoods first. If you're unsure of the area, and kind of unsure, then yeah, by all means, go ahead. But that doesn't mean that we want you to go do that first. If you want to do it on your own, then go ahead. But especially if it's far enough, why take two trips? If you think you want to see it, we're more than happy to show it. Like I said, unless you're unsure about the neighborhood and how, what things look like in the area, and you want to get more familiar with maybe where the bus stops are, or if there's any trains nearby, or supermarkets, and things like that that are important to you, then yeah, by all means, go ahead and do a drive-by first, and then we can schedule the viewing for the inside.
Thank you, Felix. The second question here. How can one obtain an FHA loan?
So the FHA loan, you had to go to the bank, and speak to us directly, and we will let you know. It is possible for you to get an FHA loan. It's very easy. It's not hard. It's actually one of the first-time home buyer that we have, that you'll be able to get an FHA loan and obtain a house with a low cost, so you don't have to put too much money for down payment.
Thank you.
Can you go to the next slide?
So over here, unless there are any more questions, I think we can go ahead.
Yeah, let's go ahead and then I
Okay.
will recap with the new next
Okay.
questions.
So here are some of the kind of questions that we get asked often, or some things for you to think about. You know, even though nowadays is how long things have been for sale is not really that significant, but usually people ask, well, how long has that house been for sale? Is it been there for a long time? Is it not? Usually that's an indication of how likely a seller may be willing to negotiate. Sometimes it's not. Sometimes there are reasons why it's been on the market for so long. They may need a lot of work and so on and so forth. So it's something for you to kind of think about. If you see a house has been sitting there for 3 months, sometimes you might want to think about it twice before going forward, because it may be a reason for it, right? Especially in the hot market that we have today, where things in 2 weeks will go under contract. The next one is, well, how much do you feel comfortable with paying for a house? And not just paying either, it's just how much you, not paying to buy it, but rather how much your monthly mortgage will be. That's something that a lot of people kind of miss. They focus on how much you want to buy it for, like if it's $500,000 house. I think what's more important is how much is your monthly payment going to be, because that's what you're going to be doing long term, and you have to feel comfortable with that number. So that's something else for you to think about. Then next we have, what's the condition of the home? Is, it's something when you're looking, are you willing to do some work to fix up the house before you move in? You're willing to do some kind of fixer upper stuff here and there, um, or do you need something that's ready to go with brand new appliances and brand new everything? So it's something else for you to think about before you start looking and going out there. And finally, the wants versus needs. I'm sure if people start thinking about what they want in a house, they could write up a very long list. But it's, and like we said before, especially in this market that is so hot, you want to make sure that you have your needs first, so you can meet your needs, and then your wants will be kind of come secondary to that. So do you need 3 bedroom or 4, or do you need a second bathroom, so that if everyone's getting ready in the morning, you have enough bathrooms for everyone? Do you need a parking space, and things like that, versus just wanting 3 parking spaces versus just 1 or 2, or wanting a big backyard for your kids to run around versus needing a backyard for your kids to do their sports and things like that. So it's very important to kind of focus on that and differentiate between your need and your want. Um, Anything you want to add to these, Anody? Any other questions that may not be listed here?
I think the only one that I'd expand on would be the home conditions, right? Apart from verifying what you're looking for versus, a new home versus, an older home, is to determine, to keep in mind that as part of your home purchase, there's always the home inspection. And once you settle on a house, once you put an offer and the offer has been accepted, the next step is to have a professional home inspector, which is part of your team, come in and actually look at everything in the home to make sure that the mechanical systems, make sure that the structure, the windows, everything that keeps your house up and running is in good condition for you to move forward with that purchase. So keep that in the back of your mind, that even if you're buying an older home, not a new construction home per se, but an older home, you will have somebody that will work with you to make sure that the purchase you're making is sound and will last you for years to come.
I have a few questions on the queue. One is, as a first-time home buyer, what is it better to obtain, a VA loan or a FHA loan?
Well, I think I'll try this one. So the difference between a VA loan and an FHA loan can be boiled down to the down payment. For an FHA loan, you're typically asked to put down 3.5% of the purchase price as your down payment. And it also comes with what is referred to as a PMI, which is, I believe, private mortgage insurance, if I'm not mistaken, which is a payment that gets added onto your monthly payments. So quickly to summarize, FHA loan, you have to put down 3.5% down, plus you pay a little extra per month. The benefit of the VA loan is that you can put as little as 0% down, so no money down when it comes to your down payment, and there is no PMI. So in terms of the two options, the VA loan affords you the ability to buy a house for a lot less money. You are only responsible for covering your closing costs. And your monthly payments are also a lot less because you are not paying that monthly PMI payments. So I always advise, if you have the option between the two, always go for the VA loan, because it'll be a better financial choice for you long term.
Anori, as a VA, can you, if you already have purchased a house with a VA loan, can you purchase another house with the same, using the same product?
So the answer will be, it depends. For the VA loan, the way it is set up, and mind you, I would have to just double check if anything has changed. But for the VA loan, you are given an entitlement that varies by region and by state. For example, last time I checked, that entitlement for New York goes up to 700 and something thousand. But if you go down south, for example, like say North Carolina, that entitlement may only be 300,000. Using the example of New York, if you purchase a house that's only worth 100,000 in New York and use your VA loan, and you've lived there for a year, and say you need to move to North Carolina for whatever reason, you've only used like a tenth of your entitlement. You will obviously have to speak to your loan officer to get more into more details around how this is calculated. But you are entitled to use that balance of your entitlements for a move, depending on distance, to reuse that VA loan. And of course, if you sell your house, the first house, then you've paid off your VA loan, you can reuse it again at a later point.
I actually have a question in relation to what you just said. So in order to be approved for the VA loan, do you need like some qualifications, some requirements?
Yes. So a VA loan is a Veterans Affairs loans. So to qualify for a VA loan, you need to have served in the military in the US for a minimum of 4 years and have been discharged honorably. If you serve in the reserves, I believe that minimum is 6 years, and you have to accumulate points for the reserves, and again, be discharged honorably. If you meet the discharge qualifications, if you follow all the rules and serve your time, then once you finish with your military commitment, then you automatically qualified for the VA loan.
What we would do in the bank is that after a customer come and ask us for that loan, we're going to ask them that we had to pull up a certificate. We had to go to the VA association. We're going to ask them for a certificate confirming that the borrower is the VA. So the customer still has to confirm on their end that you actually are a VA, and they're going to let you know how much you qualify, like I know they was saying.
Correct. And if you are a veteran, part of your discharge would have been to create a Veterans Affairs account on your eBenefits website. If you do not have an account, it's very easy to log on and create one. You can also stop by any VA facility, any VA hospital, and they will gladly help you with the accounts. Once you have the accounts, you can easily log on and download a copy of that COE, which you can then share with your loan officer.
Do you want me to ask the questions, or let's go? We can go to the next slide.
If you want, what we can do, we can go to the next slide, and then we can finish the question.
Okay.
And see, most likely is about question as well. So for us as a who's involved in the bank? So for me, basically, I'm the face of TD Bank. I'm the one who take application on behalf of TD Bank. But most of the time, we work with processor. We work with underwriters who make that decision for us. A lot of people think that we're the one who make the decision, that you're the one who qualify me. No, basically, we obtain the information from the borrower, we submit it to the bank, the underwriter review it, and most likely they will take a decision. So it's not just the person who's helping you. What we can do is that we can try to help the customer as much as possible. If they have something that they need help in responding to the bank, we can let them know, we can assist them, how will they be able to do it. The process as well, we do take between 30 to 45 days. Now with COVID, It's taking a little bit longer. Sometimes it take up to 2 months or more than that. Basically, is that we're reaching out to the title company, we're reaching out to the appraiser company, and they're taking longer for them to go to see the business. So it's just not the bank, and as well also too the process depends on the customer. If the customer take long to give us the information that we asking, we are going to have the application on hold. So if I ask you, hey, can I have the 2 years or 1 month of pay stub? You're missing one. We're still waiting for that one. So your package will not be complete until you submit the 4 pay stub that we're asking you. So that's why it's good for the customer to be ready at the beginning of the application. That way they have all the documents. So in case we need something, you're ready to submit it. The different type of loan we have mentioned before, like I mentioned before. Sorry, we have a few type of loan. In the meanwhile, let's say for the first time home buyer, we have 2 programs, or we got 3, that will help the customer to purchase a house with as low as 3.5 down, which that means that you don't need too much cash to purchase a house. They also get some assistance for the closing costs. So it all depends based on your situation and your income that you'll be able to qualify. You can also apply for the FHA loan as well. So it's different lender, almost majority of them, we almost have the same product. It's just a different bank, different lender, and different person, but majority of them, we all have the same different products. They just different name differently. The loan pricing and what the points. A lot of people come and they go to a bank and they say, Diana, I went to this bank and they offer me an interest rate of 2.8. How come this bank is offering me 2.6? Basically, there's something called points that you basically, it's like you buying a point and you're paying for it at closing for you to get a lower interest rate. Some banks, what they do is that they quote it to the customer and they don't let the customer know, hey, you're actually paying for points. So it's basically it's how the person you work with and what's the interest rate. It all depends on the market as well. Some points, a quarter point can cost $3,500, 1,000. All depends on the amount of the loan. So it's always good to ask all the questions and ask them, does this quote have any points? Because some banks, what they do, they trick the customer and they give them a 2.5 or 2.6, and does it have points? It might have points, but they would just show it to you at the end. So it's always good to ask the question, uh, just to say, hey, do I paying any points right now? A lot of customers don't know about that, but that's something that you should be educated on. What's the process of the interest rate? Because there will be a lot of hidden fees inside the interest rate. Can you go to the next one? Now we go into the loan closing. At the loan closing, like I mentioned before, we're definitely going to pull up your credit again. It's going to be a soft pull. So the whole process, the whole application, is good for you to let the bank know any change that you have made in the whole application. When it comes to closing, we're going to re-pull your credit as well, and we're going to check a verification on your job. So it's always good for us to find out if you're still working or if you're not. The closing takes place, it depends on the customer. It can be at the office of the attorney who you decide, or the TD Bank location. It's up to the customer how they feel more comfortable. But doing TD Bank right now, doing COVID-19, right now we're very limited. I went to a closing and we would just wait outside. Uh, it was like the title company, the attorney, and the buyers, but that's it. So the realtor and myself, we had to stay outside waiting for them to finish. So at this point, a little bit things have changed, but we're still working, we're still having closing. Who can attend to the closing? It can be the buyer, 100% they have to be there. The buyer, uh, the attorney, and if the real estate decide to go, they can go as well, and as well if I can go as well. My thing is that I feel that we should all be with the customer at the beginning of the process and at the end of the process. So we walk you to the beginning to the end. So that's the legend that we have to always have make the customer feel comfortable and that you're not alone. After that, you definitely are alone with your loan. That is always good to ask a question before you do any closing. If you have any doubt or anything, it's good for you to find out. But what happened next? So after you make a payment, the bank allow you to have 2 months of not paying your mortgage for you to prepare. But we still gonna have a lot of paperwork. So you sign your whole life. Because when I went to the first closing, I was like, all 50, it was between 50 to 100 pages that you had to sign. So it's basically you had to be prepared. You have to have the information. They will provide it to you. I'm going to come close in time. What do you need to take? And that, again, you're not alone. This is the process that we will walk you through it from the beginning to the end. And can you go to the next slide? And that's it. So basically, for me as a mortgage loan officer during COVID-19, we are getting super busy. A lot of customers buying. A lot of customers feel that this is the right time for them to do it. It's always never feel that you're not ready to buy until you go to a bank and they tell you you're not ready because your credit score is bad, uh, because of your income is too low. So don't let yourself down for that. Always find the best thing is to go to a bank and find out, hey, do I qualify to get a mortgage? What options do I have? How can I get one? And what information can I get? So never have no doubts about yourself and saying, hey, will I be able to qualify? You never know. So if you don't go and find the information, you will never know. It's always good to go different banks and find out some information. I know I work for a bank and I'm saying this, but it's always good to be go back and forth and find out if they're saying the right thing. And if you feel more comfortable working with a person, that's the person you should choose, the person that you work with. And now we can go to the question.
Yes, thank you, Diane. And I just want to mention that I shared information on the chat of all the panelists. That way people can follow up directly with you. I have some questions on the chat, on the questions and Q&A. There is one say, can you explain what no money down house means? And the same person is asking about how to purchase foreclosed or bank-owned properties.
So with no money down, let's say you have a grant, you have to put as little as 3%. Oh, what happened to my computer?
It's okay, we are okay. You are live.
You have to put at least 3% down, but you can use grant. With the VA loan, that's different because they have their products is different. You can put as no money down, but you still have to put a little bit of cash for your closing costs.
Thank you. And the bank-owned properties, how people can find out about those?
We do. If you go to TD Bank, they do have what is a foreclosure list. You can go to tdbank.com and you can put foreclosure list and you will have a list. They update it every month or every 2 weeks. I see the change of the houses that TD Bank has there. And any bank because it's just for the public. But the only thing is that when you do foreclosure, the process is a little bit longer than the regular house. So you're not gonna be able to close in 30 or 40 days or 45 days because the foreclosures actually take longer than that.
I have another question here. It's about the veterans loan. Can they buy any type of property, condo, co-op, single or multifamily home?
Yeah, so for a VA loan, you can buy any residential housing unit. So it can be a condo, a co-op, uh, even a multifamily up to 4 units. As long as it falls within that standard residential, bucket, then you can buy it.
The only thing is that when you buy a co-op, which you become a shareholder, they're gonna ask you for your credit. So they're more particular than us. For us as a bank, you don't have to have no credit, no minimum credit. But then for co-op, they ask you to have a minimum at least of 700. So you have to be always show if your credit score is that. So sometimes what we ask is not what the co-ops ask. And when you have a condominium, actually you own that. That one you don't have to have a credit score because we work almost similar to the bank.
I am looking at some of the questions and see most of them you already answered online, and that is why, just give me 1 second.
Sure.
But we would like to know like a final remarks from Felix and Anori before we go with Diana.
All right. Well, we do want to thank you for inviting us here today. It's been a pleasure participating, and hopefully we gave some useful information. And if you do have any further questions down the line, I believe in the chat they shared a lot of information. We'll be more than happy to answer any follow-ups. And if you are ready to start looking at houses, more than happy to go show you some houses as well. So thank you, and hopefully we can help you out in the near future.
Thank you, Felix. Anori, any final remarks?
Yeah, pretty much the same sentiments as Felix. Thank you all for inviting us to be here today. Happy to lend a hand with any follow-on questions that anybody may have that perhaps were not covered here. And like Felix said, feel free to reach out to us at any time. We'll be here to help.
And for me, thank you again, Jackie, for the invitation. It's always a pleasure. Thank you for attend. This is the first step that you need to actually have knowledge. Knowledge is power. You need to be involved in your process. You need to know this information. It's being top of your pay stub, of your W-2, your taxes, or your credit score specifically. Know your credit, because a lot of people, they don't know their credit until somebody else running. Don't let that happen to you. Always be on top of that number, because that number is the one that's going to take you to a lot of places, even to get a regular loan. Right now, we're going through a lot of situations due to COVID, a lot of changes, but we work in the same as before. We just changed a couple of things, but that doesn't stop us for us to continue lending or to continue giving mortgage to customer. So it's always good for you to reach out if you have any question. A lot of people feel embarrassed to ask any question because they feel that it might not make sense. It might be for others will not make sense, but for us it will make sense. So reach out to us if you have any question. Feel free to email or you have any question. And thank you so much for the invitation.
Thank you, Diana. And before we go to the final closing remarks from Tasneem, our outreach intern, I would like to thank you, your participation, being here, and very proud for Queens Chamber of Commerce and TD Bank Charitable Foundation to give us this opportunity to bring this important information to the customers. Tasneem?
Yeah, thank you everyone for this wonderful, wonderful presentation. I just have one last question that I'd like to address, which is someone asked before, for a first-time home buyer, what is a better option, looking into or buying a single-family house or like a two-family house or something?
I'll take that one. It's always up to the buyer. So if you're able to buy the single family on your own and be able to make those payments, then go for it. And especially if you're not ready to handle tenants, dealing with tenants takes patience, and having to fix a toilet in the middle of the night, or doing different things here and there, and making sure you plow the snow when it when it snows outside. It does take work, so you got to be ready for that. Obviously, as part investor myself, I always, if it's an option for buyers, I always recommend them go the multifamily route, because that gives them more options to be able to have somebody else pay part of your mortgage. You keep more money in your pocket on a monthly basis. And if down the line you do want your own private house, then having the extra income from the original multifamily house will allow you to get that other single family house down the line, if that's in the cards for you. So it's up to the buyer. Whatever they need and whatever they feel more comfortable with, it's what the way they should go. But if it's a possibility, I usually recommend financially that it makes more sense to go with the multifamily.
Thank you so much for your answer. I think we have a hand from Richard Mummy. I don't know if they have a question. Oh, okay.
We answered all the questions live.
Okay.
Yes.
Okay. All right, so thank you everyone for joining our webinar about the home buying made simple. Thank you, Diana, Felix, and Anuary for this wonderful presentation. We hope to work with you in the future. And to all the attendees, you guys can always look into our websites for other events like the one we had today. So thank you, everyone. Take care.